I've been pretty spot on about the market in 2023. I was bullish at 18K when everyone else was bearish. Everyone was saying this is a bull trap. There's no way that the price can keep going up. I turned bearish at 24K resistance when the same people were calling for a new bull market, when everyone was getting overly excited. And here we are, crashed down another 15%. I also think I've got a pretty good idea what's going to happen next and how best to make money from that. But there's absolutely nothing impressive about being able to predict prices like that. And I put predict in quotation marks because I absolutely despise it when influencers sit here and talk about how everything went exactly as they predicted and try to portray themselves as some sort of know-it-all guru. There's nothing impressive about being bearish at 24K resistance after a 54% pump if you've got any sort of basic understanding of technical analysis. What is impressive, however, is being able to keep those emotions aside and keep a clear head, not letting that greed get to you. We'll talk about that. What's more important than predicting is understanding how to actually make money, how to place your trades, your stop losses, your take profits, and all of that. That's what's going to guide you to actually making money in the markets. Those are the difficult questions that I'm going to try answer in this video today. You don't need 1000 IQ to make money trading. It's actually very simple. The difficult part truly is keeping those emotions at bay and not letting the wrong information into your mind. If you like this sort of real content, don't forget to subscribe to the channel. I'll be keeping you posted on the market all throughout 2023 and beyond. Now, I've noticed a few of you have started to use my referral link for Femex, and I really appreciate it. Please let me know in the comments if you do. I'd like to thank you personally. I'm pretty good when it comes to trading and investing. I'm not very good when it comes to monetizing at all via social media. So the few of you that do support my content, I appreciate it. And I've done plenty of giveaways before, and I'll do more in the future where I can pay it back to my audience. Okay, clean chart, everyone. Let's highlight the key levels that we're watching. Key resistance over here. Then look, first high there, second high here, about 22K. And then another one down here at about 21K. We've got support here at 18, and then a softer support here at 16. Although this could just be a bit of a trap, and I'm not sure how much of a solid support has formed there. Now let's zoom into the daily, make some adjustments. Take this level a little lower, about 24K, because that fits better. Take this a little bit higher, about 22K, to line it up with this data point and these data points. And then here, we'll take it up to about 21.3K. And we'll take this down here to about 18K. Right, we've got some key levels marked now. Notice you start from the high time frame, and it's like a microscope. The more you go into it, from the weekly to the daily, the more fine-tuned it gets. If we were to then go to the 4-hour, you could again look for more pinpoint precision on your levels. That's why when you're looking for tighter entries, when you're trading shorter distances, like you'll see later when I explain the breakdown trade here, you'll go into the 1 hour, even the 15 minutes sometimes, to get better entries and more accurate levels. So let's analyze this move here. You see a lot of momentum building here, almost like an exponential curve going straight into this key level. That is the type of breakout we want along, because when you see no pullbacks and something absolutely steamrolling into resistance, that's likely going to be a breakout. That's why I was very bullish here and looking for the long. And following that, we got an absolutely massive move up here, straight into this key resistance there. So predictable, so clean, absolutely loved it. Then it came down, and I thought it'd come down a lot more actually. It didn't, and then went straight back up, so the steamrolling continues. But if you take a look, it was a lot weaker. The move sort of ended here, and then started to get really choppy, and failed twice to break this 24K resistance. When you see something like that, you're thinking, okay, a lot of strength is lost. We've hit the resistance. Let's zoom out. Let's look at the chart. It's macro bearish. I'm not expecting this to continue. It's not highly probable. And that's how generally I knew that this probably wasn't going to continue going up. Now that's a prediction, and I was right, but that makes me zero money, absolutely nothing. So how do we change these arguments into things that actually make us money? Well, I shared 2 trades, and both of them were viable options that played out really nice. It depends on your playstyle. Now, if you like taking more predictive trades, then this was the exact one I shared. Right here. And when was this? Probably the Sunday, so I likely was sharing this on the Monday. Price was coming down, and I expected it not to break on the first test. Hit this level, then go back up to around this level here, and then test that, and then come down afterwards and fail to break. Now, why did I draw these lines? Well, firstly, the bounce up, I don't know exactly where it'd go. We've got a little bit of data there, especially if we zoom in on the 4 hour. It becomes a lot more clear. You can see that it's likely resistance, 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 then a trap, then another trap, then acting as support here. This looks like the rebounce level there on the lower time frames. So we're looking at something around there, and now we've got ourselves a really good argument for a trade. Because if we take a short position, entering somewhere around there, and then we invalidate up here, because what we're predicting is that if this level's going to break, if the trend's about to go bearish, the bounce will lose demand. So demand goes down. People are selling. People are no longer buying. It's not going to bounce as high. Hit this level and then come down. Now, when is that no longer true? Well, if it bounces higher and demand doesn't fail. When does demand not fail? When we hit that level there. So we've got our invalidation stop loss. That's when our argument no longer makes sense. Then we come down here and we're targeting about 21.3K. Now you can take this up to about this wick here. If you want it to be super conservative, you could take it here. And then you can move your entry up, whatever you want. The specific levels when you're entering, exiting the trade, normally you're looking for laddered entries. You're not just picking one level, or you just market enter at a certain point, depending on what the market's doing. But without getting distracted, here we have the trade set up. Let's go back to the daily. Take a look, candle by candle. Price continued down, and we got that big bounce up straight into our level. This is where we're watching really closely. This is where we're looking to enter. We could be zoomed in on the 15-minute. We could have already set up the trade a few days ago, picked our levels, left it, and let it play out itself. And you can see price bounced around a little, and we got exactly the play out. And it played out exactly as we thought it would. So here we are now. We'd be heavily in profit. We could exit the trade if we wanted to. We can reassess the situation and decide what we wanted to do there. That's the predicted trade. Now, the reactive trade. We zoom into the 1 hour. This was a beautiful opportunity right here. Take a look. Remember what I was talking about, seeing evidence of the demand weakening. Right here, right here. Look at these beautiful opportunities that presented themselves. Price came down, showed this clear level here. You could have watched for a break of this level. Price came down, hit here, wait for the retest, boom. Perfect entry right there. Next opportunity, you could have gone for the breakdown play on this candle here. So it was extremely rapid. Even the 1 hour would have been tough to catch it, but you could have waited till the close. Entered here, set the stop loss maybe at the bottom of the wick, and then looked for a trade expecting continuation of this downwards momentum. If you're watching this right now, you can even see set a level here. Let's take it down a little bit to match up with all these wicks, then wait for this break here. If this level here breaks or this level here breaks, we should see aggressive movements up or down. This is now we're getting into intraday territory. This is not swing trading territory anymore. You need to be at the charts, watching what's happening pretty much 24/7 with alerts on to pull off these sorts of moves. But they're very clean, and there's a lot of opportunity to make money here. Right, enough hindsight. Looking ahead, what are the main plays? Putting day traders aside, I no longer really love this area for swing trades. Day traders, loads of momentum, huge price movements, lots of money to be made, trading level to level on the lower time frames. However, if you're trading the higher time frames now, this area doesn't look that great. You can potentially go to catch a small bounce over here. I don't love that play. Personally, I would sit out a bit. Let's reset our key resistance here at 28K. There's two big opportunities coming up. If we break this level here, we've got a big move up there. And if we break this level here, we've got a nice big move down to there. Those are my two favorite plays right now. Shorts around here, longs around there. That's what I'm going to be waiting for and paying the most attention to. If I've got the time to stay dedicated and focused on the lower time frames, there might be some trades to take there, but that's not what I'm looking for at this moment. Finally, it's not over for the bulls by any means, because if you zoom out to the weekly, this is a beautiful chart right here. Remember candlestick analysis, the bear army versus the bull army. The bulls are winning right now. 3 huge candles here, completely engulfing all of the previous bear candles in this range here. And we've got price coming down now. If we take our Fibonacci levels, it's actually pretty far from the 382. So if we stay above this level, this is still a really strong, clean move up. Down here, up to there. That is a beautiful bullish move, and if we from here bounce into resistance, I will absolutely expect it to break and see some momentum following afterwards, and that's the ideal play I'd like to see. Unfortunately, if we don't get that, if we lose this level, I do expect us to come at least retest the 18k all the way back down there, and we'll reassess our game plan at that point. And quickly for Ethereum traders, just to mark out the key levels over here, we've got these two. Then I quite like looking at the moving averages for ETH as well to get an idea of the key levels. We can see this 100-day moving average over here synced up with a few key levels. Really nice play opportunity coming up with a breakdown here down to here. That's a big aggressive fall with a lot of opportunity to make money. To the upside, we've got, if we break out from here, we can see a key resistance over there, potential trouble area over here, but both of them provide a decent opportunity for money making. And that's everything.